Good afternoon, everyone. It's Pablo Zuanic, Cannabis Equity Analyst at Zuanic and Associates. Thank you for joining us. We have a panel to discuss the state of the California market, but most importantly, to discuss the national and global appeal of California brands, right? They continue to expand in various states and some brands even overseas, right? So we're very happy to have this panel of four speakers today. We have Cich. He's a co-founder of Kanha Sunderstorm. We have Theo, Terris, CEO at Uncle Arnie's. We have Wesley, Hein, Head of Global Brand Expansion at Mammoth Distribution. And we have Chris Lane, Chief Marketing Officer at Gremlin. Welcome, everyone. So look, I just make a quick, if you want, let's just start with brief introductions. Keith, if you can just tell us briefly about your company, please. Thanks.
Sure. My name is Cich. I'm co-founder and CFO of Sunderstorm. We're best known for our beloved Kanha gummies with the tiger logo. Pictures worth 1,000 words. We originated in California in 2015. We pioneered fast-acting gummies in our history. We also came out with the very first doctor-formulated function line of gummies. So we're very science-based in our approach. We're currently an MSO operating in 4 state license markets across the country. We actually opened up in the hemp space, both B2B and online last year. And we are probably the first couple Western cannabis brands to open up manufacturing operations on Asian soil. So we're based in Bangkok. We're selling into the domestic THC market in Thailand. We're one of the leading gummy companies there. But more importantly, it's a long-term, low-cost base for global export. Happy to be here.
Great. Thank you, Keith. Theo, please go ahead.
Yeah, first off, thank you, Pablo, for having us on. It's awesome to be here and excited to be around such talented individuals like Wesley, Keith, and Chris, great operators in California. So for those of you that don't know me, I'm Theo Terris. I'm the CEO of Uncle Arnie's. We've been in the cannabis beverage world for the last, actually just coming up on 5 years. This May will be our 5th year anniversary. So we're almost like dinosaurs in the cannabis beverage world in this quick and evolving market. For us, the first 3 years of our operation were focused solely on California, which we're here to talk about today. It was our philosophy and still is to this day that California is the largest market. It's the most competitive market. And if we could win in California, we could then, replicate some of that success out of state. So it took us longer than we thought and expected to move out of California, about 3 years. But over the last 2 years, we've really kind of dove headfirst, both on the recreational side and then, as Keith mentioned as well, on the hemp side as well. Currently selling on the rec side in California, Nevada, Arizona, Michigan, and Illinois. And then about a year ago, we dove headfirst into the hemp market. For those of you that don't know, we're selling mostly in traditional points of retail, so wine and liquor stores, bars and restaurants. We launched about a year ago in Minnesota, then quickly expanded into New Jersey, Ohio, and more recently into Connecticut, North Carolina, and Indiana. So excited to be here today and talk about the California market and the opportunities and challenges.
That's right. Thank you, Theo. Chris, please go ahead.
Yeah. Hi, and thanks again also, Pablo, for setting this up. Great to be with everybody here today. My name's Chris Lane. I'm the Chief Marketing Officer for Gremlin, which is a part of the Gold Flora family of companies. So we're a single state operator solely focused on California. We have cultivation, manufacturing, distribution, and retail across the state. But Gremlin, obviously the brand we're here and super excited about today. We launched just over a year ago, in fact, in the market. So it was a completely fresh take on a new brand. And in the last 11 months, we've gone from launch to now the 6th highest selling brand in the state, according to Headset data. So we've seen the fastest year-over-year growth out of any brand in California, largely focused on the flower and vape products, and quickly expanding, but also a lot of indoor live rosin and all fully indoor products. So like I think Theo said, I think we have a full belief that if you win in California, you can win anywhere. And I think we're excited to see what the trajectory of this looks like, even in a really complex market right now.
That's great. Thank you, Chris. Wesley, please introduce your company. Thanks.
Sure. So Mammoth Distribution, we're effectively a house of brands with a best-in-class distribution system. Our brands are heavy hitters, which is how an awful lot of people know us, but also Almora. And then a little over a year ago, Pop and Barkley joined the family through an acquisition. We operate in California. We are really focused on California, like Theo and Chris and Keith. It's such an important market, but it's so competitive. If you take your eye off the ball, it's very easy to drop here. But the benefit of doing well here is that it really does, if you can win over the California consumers that are so knowledgeable and the retailers that are knowledgeable in the cutthroat competition here, it really sets you up to do well in other markets. And we are now in New York and Illinois, and soon we'll be in New Jersey.
That's great. Thank you. Wesley, I want to stay with you. Look, I want to discuss your views about the state of the California market right now. And then separately, we'll touch on what are you doing to adapt in California and maybe trying to grow outside California. But let's just concentrate on the state of the market right now. Wesley, I'll start with you. Describe market conditions to some extent, the impact on sales and profit margin trends. To some extent, from our point of view, these conditions are leading to consolidation, maybe, weeding out some weaker operators. So there's a lot of data out there, but it seems to me that the stronger brands, the stronger companies seem to be doing well and consolidating. So just try to unpack that for us a little bit, but stay tuned.
Well, there's a lot to
sorry. A lot to talk about there.
A lot to unpack there, but a couple of things. One is anybody who's probably in the industry in anywhere in the country knows about California's problems. Excessive tax, excessive, and burdensome regulations, very weak enforcement. And that was before the onset of, we had all of those before the intoxicating hemp kind of coming in. So you can go into any smoke shop and get whatever sort of designer cannabinoid that they've got there. So we have all of those. That's really no new news. In terms of, and it's difficult for any operator to be immune to those type of external things. And so, and honestly, most of those are impossible to control. And so just have to focus on trying to do the best. And the one thing about, markets is they will always get into equilibrium. We kind of wish they would grow, we could grow into equilibrium, but at a time like this, the market shrinks to it. And then you're right, that's going to be consolidation in some form. And, that can be either in the case of mergers, acquisitions, or people just leaving the state or leaving the industry. We've had an awful lot of brands go over to hemp and just out and out leave the regulated market. And we've had others just leave California and operate in other states. And of course, an awful lot have just disappeared. Doesn't have to be a negative thing. A lot of people are like, oh my God, they sold out, how terrible. Well, many brands are incredible brands. They have great products, they have great people, but it's difficult to try to be, and not every brand should try to be a standalone company doing everything. And so being able to come together and focus on those things that make them unique and make their products unique ends up being sort of, sorry for the cliche, very much of a win-win.
Right. So Wesley, just staying with you, realistically, what could change for the better in California in the next 12, 24 months?
Well, I'm an optimist by nature, but I hate to say it. I don't see anything changing for the better really in the next 12 to 24 months. I think we can be an optimist in the sense that this is a big market and these are amazing consumers, but the problems that I list are not going to be able to be, sort of changed or to turn around in the next year or two. A lot of people have sort of thrown out and said, "Whoa, what if, the federal rescheduling is going to come to save us?" No, it's not. Banking, any number of different things. So I think it's just, it's buckling down, it's continuing and use this opportunity to build, strong, sustainable businesses. Unfortunately, I'm old enough to remember the dot-com boom of the early noughts, but when, basically companies were going under, term sheets were being torn up, all sorts of things. It was that time that Google and eBay and PayPal and Expedia grew, that exact time. Because before that, when it was so frothy, it's very hard for people to be sort of noticed and to grow. And so I think that we're going to see great companies and great brands come out of this, but it's going to suck for the next couple of years on an industry-wide level.
Thank you. Keith, your views on the state of the market in California right now.
Challenging for sure. I think we can look back and say that the pandemic kind of artificially goosed cannabis sales. I mean, we paid people to sit home and take a gummy and watch Netflix. That was naturally going to change. But I think what it's forced is forced all of our players to really become more efficient. Ironically, our gross profit consolidated our company was higher in fiscal 24 than in fiscal 22 at the peak of the market. And it just forces you to be innovative on your SKU lineup, automated in your production, and really cost efficient in how you look at the world. So, it's definitely a period of consolidation. I mean, we have well over 1,000 brands in California. There's not that many ice cream brands, really. So I think it is ripe for consolidation. There'll be some brands that will fall off the map, which will help bigger players like the people on this panel. I think a healthy ecosystem does have large, medium, and small players. So I hope we continue to have kind of diversity. I think that's good for the consumer, good for the industry, but there's no doubt that the next year is going to be a massive M&A consolidation and forcing everybody to be as efficient as you possibly can.
Thank you. Theo, on the same subject.
Yeah, I think Keith and Wesley covered most of it. You guys were both spot on. I think specific to beverage, and Wes, you and Keith both touched on consolidation. I think on the beverage side, that has already happened, to be honest. So if we look at 2020, right when we entered the category, 2021, 2022, there went from like being 5 beverage brands to 125 beverage brands. Everyone had their eyes on it. It's grown from that 0.25% to 2% of the market, and then kind of just stayed flat at 2. I think we saw 95% of those brands already pull out of the market. I was looking, and Chris, you referred to headset data just a couple minutes ago. I was looking earlier today. I think between us and the Pabst group, so St. Ides, Pabst, Not Your Father's, make up about 70% of unit sales and revenue in the state of California. And then there's another probably 3-4 brands kind of behind that make up the other, 25, 30%. So the consolidation has already happened on the beverage side. And I think you'd have to be crazy to enter the California market with a beverage right now. And maybe we can touch on hemp in a little bit, but I think relevant to beverage, we actually see a bright opportunity on the recreational side because everyone is diving into hemp when it comes to beverage, and we've seen our revenue actually double year over year for the last 5 years in California, and we're hoping to do maybe not the same this year, but to continue to grow another 20-30% over what we did in 2024.
Thank you, Chris. I mean, the same question, just your take on the state of the market right now.
Yeah, I mean, I think echoing a lot of what everybody else said, I think, the thing to add to that we all know, which is why I think we're all still in the market, is California will still always be California. So the opportunity right now is to figure out how to make a play. There will still always be California consumers. It will still always be, a bellwether for trends globally, frankly, across all of these things. And California cannabis being the sort of shining light example that the rest of the world has always followed and continues to do so. So I think while it's super challenging, in a lot of ways, I mean, Gremlin is kind of a product of that market. I think, we saw an opportunity to create a brand that spoke to what the consumer today was looking for, that in some ways, maybe wasn't being achieved by the current brand mix that existed out there. And so, when we looked at developing it, we were really intentional on what are the categories that the consumer of today is looking for. The high velocity ones, the sticky categories, right? And built around that, and which, I think is largely attributable to a lot of that success, that super fast growth path is hitting people at the right time with the right products that they're looking for. And it's business and marketing in 101. But I think, California will continue to be that representation for the rest of the world of where things are going. And I think the competitors that understand that and can speak to that audience and can double down on it in these challenging times. I mean, I think Wesley made a great point on that, right? Like traditional marketing always says, in a downtime, double down, because that's when you got your big chance for growth. Like that's where I think we'll see some of those, intergenerational companies develop that are that sticky moment For the consumer, that's never going to go away, and ultimately is going to drive mind share across the world and across the country.
That's great. So look, I'm going to stay on the subject. Wesley, I'll come to you here. Let's talk about, what's working and what's not working. What are you doing to adapt, right? And we've touched on some of these things like, cost cutting, maybe going asset light. What I'm seeing is some companies moving more into retail, developing what I call umbrella brands. Some people that started maybe in one category, expanding into more categories. We talked about licensing the brands in other states or overseas, or in some cases, entering other markets, not just licensing the brand, but actually taking ownership of assets there. Just from your point of view, Wesley, what are you doing to adapt, and what's working, what's not working? And again, I know we've touched on part of this already, but thanks.
Yeah, I don't want to sound like it's platitudes, but it really is. It's, one focusing, right? One of the things about the cannabis industry was when legalization sort of came here in California, we already had a multi-billion-dollar industry that was operating sort of under the shadows. And because of that, the lack of structure and the lack of regulations, it really made sense for people to do everything, right? They'd grow product, they would grow their cannabis, they would package it, take it to dispensaries, and everything in between. There was really no value chain sort of supply chain. And so when legalization came, people were like, oh, I need retail licenses, cultivation licenses, distribution licenses, and so forth. And I think that contributed, one, to sort of a very large number of licenses being issued, which the state was very happy about. But it was really unsustainable because it's very hard, as we know, to be successful in doing any one thing, and then try to be doing multiple things in multiple ways is significantly challenging. The way that people tried to offset that was by raising a lot of money, and then that sort of led to sort of a bubble in other ways and so forth. So I think the companies that are doing well are the ones that have really zeroed in and said what is working, and then have been authentically doing that. It's not billboards and it's not marketing. You can't push something on, particularly the customer base here. This is not an East Coast limited license market where people are going, oh boy, there's a dispensary in town, I can go there. This is a place where people have been able to get cannabis freely for decades, intergenerational, to use Chris's term, sort of people having. And so it's more like, okay, why should I go into this dispensary? Why should I be paying more than I can get from any number of other different things and so forth? It has to be special. And it has to be able to withstand, that consumer coming back the next week and that dispensary is going, oh, we have a BOGO 2-for-1 on this competing brand. Oh, we have this. We have all of this noise that goes on. And the important thing is not to try to do well 1 month or 1 quarter, or God forbid, 1 420, but to build something where you're there for year in, year out. That's what brands are. And this industry is so new, I think we just get excited when we do well and forgetting that, it's a very, very, very long game to be successful in this.
Thanks. Keith, same question for you. I mean, in particular, you talked about expanding the brand into other states, overseas. Are you extending your brand into other categories, or you're still very focused on edibles? And again, in general, how are you adapting? Thanks.
Yeah, interesting. In 2016, we had hundreds of SKUs. We had vapes, gummies, tinctures, kind of everything. And then we basically, when Kanha gummies took off, we focused all of our energy on gummies and shit canned the other product categories at the time. So it's really a classic, experiment of just focus on what's working and push that as hard as you can. We also, my business partner and I also went through the dot-com implosion. And I think our lesson was that at some point, California was going to be saturated, just like the dot-com era became, and that you needed to diversify outside of California to new locations in order to survive. So in 2021, we opened in Nevada and Massachusetts. And honestly, Massachusetts has been a fantastic market for us, and our partner there has been terrific. So that really helped things. This past year, we launched in Illinois, another $1 billion plus market that's beginning to increase. We did make a new addition to the portfolio last year. We bought a vape company in Nevada. We rebranded it as Kanha Vapes. So in Illinois, we actually launched with both vapes and gummies. And ironically, we're actually selling a little bit more vapes than gummies. I think that'll probably normalize, but I do think you need to very selectively add other product categories in, because it's the same cost, like a fixed cost of distribution. It's a fixed cost for rent. You need to just drive more product through, those fixed cost categories, and we've done that. I think the two other things that really have set us apart is innovation. We partnered with a couple of medical doctors in the Midwest, designed a line of doctor formulated function products for sleep, love, restoration, energy. And that has been a kind of a new driver in our SKU category, really boosting sales over the last year. And then we basically, I think the market has shifted a lot towards solventless. We introduced our first solventless gummies in the last few months, and those are doing well. So I think you need to adapt to, what the consumer wants. But in our case, we adapted with higher value added products. So our average sales price is actually up 10% over the last 2 years in a market where, gummy prices have been dumbed down and the discount brands have taken over a good chunk of the marketplace. So you need to innovate. We also moved to a new facility in 2022. We automated more of the manufacturing process, bringing our cost structure down so that overall our gross margin is actually up 5 points in the last 2 years, when I think a lot of companies have suffered, gross margin implosion because they've been part of that race to the bottom.
Thank you. Chris, the same question for you. And in particular, as you are adapting the launch of Gremlin, it's very interesting. It made a big splash in the market. And remind us, is this a brand focusing on one segment of the market, price-wise, on one format? Just if you can talk in general about that and how you're adapting in general.
Yeah, I mean, I think actually touching a bit on what Keith was just talking about, I think, the big adapting point, I think for us is kind of the classic Wayne Gretzky comment about skating to where the puck is going, right? And I think when we created Gremlin, we were very much targeting the consumer of today. That being said, obviously understanding who California is and the maturity of this market, the consumer for tomorrow and where the puck is going, is not simply just THC and price point, right? It is looking at experience, it's looking at quality, but it's looking at all those things with, not wanting to overpay because it is still quite expensive. And so we got really bullish on live rosin. We have all indoor facilities. And so for us, the ability to produce live rosin, super premium live rosin at scale and have consistent supply is something that, we think is a differentiating factor in the market. Rosin's always been a really interesting category, but there's always been very limited supply. So it's had a very much drop culture and it comes in there, I think. But the wide consumer audience in California, that education of, moving from distillate to live resin and ultimately to live rosin, like continuing to move up the quality chain, is something that, we have because we are vertical, we have the ability to kind of de-risk our model and control a lot more of our variables, therefore producing products at a category and still bringing them to the market that is palatable for the California consumer and, even in today's economy. And so for us, it was about, really focusing operations and looking at, okay, like where are we going to place the strategic bets in order to make sure we're growing the brand? And the rosin category is interesting, but the total addressable market is not the rosin category. It's any consumer that's looking for a product that could be rosin, right? So then you just have to work on product education and ultimately drive people to get there. But for us, on the product side of things, it's about making sure we've got the right levels of products that speak to a variety of consumers, to your point. We have a core line. We've launched a number of products up in the rosin line, which you consider sort of our more premium Gremlin line. But we're also still looking at value conscious consumers. And so, it's becoming something of a branded house as it continues to grow and we continue to get opportunity behind Gremlin. But ultimately looking at, where do we place the smartest bets to get the best returns? And that's really how we've kind of focused on market development, even just in the first 12 months with this brand.
Thank you. So Theo, I mean, similar question for you here also, but I want to focus more on the drink side of things. But how you've been adapting. Remind us, is Uncle Arnie's just drinks, THC and hemp? Let's start with that first.
Yeah, so I'll just reiterate kind of what Keith and Wes and Chris were all saying. For one, to begin with, and I think maybe what differs from us versus a Sunderstorm, Mammoth, and Gold Flora is we're actually ancillary. We don't touch the plant. We're just a brand. Our whole focus is only on beverage. We have zero desire to go into vapes or concentrates or edibles or Flower, maybe that's the right decision, maybe that's the wrong decision, but I think, Wes, you said it well in terms of just focus, and our focus is only on beverage and for 3 years that was solely in California. More so the last 2 years, it's about expanding that brand and these beverages across state lines while continuing to innovate on the beverage side. I think for us in California specifically, the first couple of years, I mean, continues to be a roller coaster, but the distribution aspect was, we've been through 5 different distributors over the last 5 years. We've got one co-packer, and he's here he's on the panel today. Wes with Space Station, they've been amazing partners. Kiva is doing our distribution at this point in time, but for us, the focus was just finding the best operators for manufacturing, for distribution, letting us focus on the brand, let us focus on California before looking at other markets. More recently, we've developed new products. Chris, you touched on live rosin. We're actually going to be coming out with a live rosin and a live resin product. We just launched the live resin product in California last week. As far as we know, this will be the first 100% live resin beverage, on the market. So we're excited about that. We came out with sodas over the last 6 months or so. Before that, we were focused solely on non-carbonated products. So I think for us, it's just about finding the best operators and let us focus on the brand, let us focus on the sales.
So before we touch on hemp drinks, in terms of THC drinks, there's this, I guess, glass half full, glass half empty view. It's still only about 2% of the overall market, right? In Canada, I think it's there. In most US states, it's also in that percentage range. But as you said, the category has consolidated brand-wise. Why is it still so small in the context of overall cannabis? What are the challenges? Or maybe that's just a natural number, 2 or 3% of the overall cannabis market. Theo.
Yeah, what I would say is, again, back in 2019, 2020, 2021, everyone was coming out with their 2.5 and 5 milligram drinks. And I think there is a place for that. And it's not necessarily, at least in 2025, in the dispensary channels. And that's why hemp beverage has been really successful, both for us, but for a lot of other brands in wine and liquor stores. For us, when we came into the market, and still 95% of our revenue is coming from our high dose products, we were looking at who was the consumer going into the dispensary every day, every week, every month, and how can we attract that consumer? When we entered the market in 2020, most of the high dose products didn't taste particularly good. There wasn't real good emulsion technology out there. You would just taste the oil at the top of the drink, so they weren't very consistent. They weren't priced right. So the average 100 milligram drink was priced somewhere between $20 to $30. And there was no real brand that resonated with anyone or everyone for that matter. So that's how we came up kind of with the idea behind Uncle Arnie, creating the company around an actual character that was fun, that was welcoming, that was laid back to make it, approachable. Yeah. What was the
onset? What about onset in the case of the?
Yeah, in terms of onset time,
just focusing on THC drinks, but yeah.
Yeah, in terms of the onset time, that was really what kind of sold me on the category. In high school, college, post-college, cannabis was actually never really my thing. I was playing soccer competitively. I didn't enjoy smoking that much. The experiences I had with edibles weren't very pleasant, to say the least. And when I first tried a cannabis beverage back in 2019, it was one of those kind of aha moments that I was like, oh my God, if I'm enjoying this experience and I didn't enjoy smoking much and having edibles much, I can see where this is going. Now, I didn't know if that was going to be in 2020, 2030, 2050. And I knew that, not to say that smoking or vaping or edibles are going to go to nothing, because I still think that there's going to be a large category for that. But that 0.2% of the market I knew was going to grow. Unfortunately, it's kind of capped at that 2%. And I think that's mostly because people are going into dispensaries looking still for flower, or looking for vapes, or looking for concentrates or edibles. And they're not really looking for beverage. So we're not meeting the consumer where they're normally buying a beverage. And that's been changing with the hemp side, where people are going to wine and liquor stores and bars and restaurants. And that's where they're, used to buying beverages. So
just on the hemp drinks, before we touch on the other categories, edibles and vapes, with other people on the other panelists. So in terms of you talked about many brands in THC drinks 3-4 years ago. Now only very few. Now it's the opposite in hemp drinks, right? There's probably too many brands. Some selling online, some selling in liquor stores. How is that playing out in your opinion right now in California? And I know you can ship nationally. So
yeah, so on the hemp side in California, that's non-existent at this moment in time. That there's no regulation behind it. But I can tell you generally what we saw in California, which is that hundreds of or dozens of brands came in on the recreational side. Now that's been consolidated down to about 5. We're seeing that times about 100 on the hemp side. I can tell you 2 weeks ago, I was in Denver at the WSWA, the Wine and Spirits Wholesalers event, as well as Canada, and I probably saw, I don't know, 50 or 70 new hemp beverage brands that I'd never seen before over the course of the last year. Most of them kind of look the same, feel the same, are going after that same kind of soccer mom, new consumer. They're zero sugar, 0 calorie, seltzers, tonics. One isn't really differentiating itself from the other. I think where we've come into play, and one of the reasons we've been successful entering the hemp market, is because we've really leaned into cannabis. We're not trying to hide the fact that we're, a cannabis beverage. Tie-dye, it's very colorful. All of our drinks, although we have some 0 sugar, 0 calorie, or 0 sugar and very few calories, we're not putting that at the forefront of the company. So we're really trying to differentiate ourselves from what's currently out there. And so far, so good.
Last question on hemp drinks. So a lot of the brands are still very reliant on their online platform, right? They haven't been able to build brick and mortar distribution. Is that true? And how are you faring in that sense?
Yeah, for sure. I think, and that was one of the things I was trying to evaluate also at WSWA and Canada, and I'm having frequent conversations with other brands that are in the hemp space. There are very few brands that are doing well across state lines in multiple states. There's a lot of craft beer companies that have kind of dove headfirst into hemp because craft beer has been stagnant or on the decline. And those brands have performed really well the first month or 3 months or 6 months in their local markets, but they haven't fared so well when it comes to expanding into other markets. I think for us, we've really been investing in sales and marketing, coming up with a proper strategy, finding the best distributors in each of the states that we're in. So we've taken a little bit more of a targeted approach when it comes to expansion. In 2024, on the hemp side, we expanded into Minnesota, New Jersey, and Ohio. In Minnesota, we're with the AB network. In Jersey and Ohio, we're with mid-sized craft beer distros. But in each of those states, we've hired our own sales force. We've got proper marketing budgets. We've got great distribution agreements, and I think it's paid off well. We're the top supplier in each of those networks, both in all 3 of those states, and we intend on doing the same, in 2025 and a lot more markets.
Thank you. Look, I'm going to move the discussion to vape. Wesley, heavy hitters, Chris, of course, Grambling and other brands. Wesley, just talk about category trends since that cards are going down, cartridges going down, AIOs growing. Remind us, how does your brand stand out? Are there any disruptive brands out there? What's new in terms of innovation in vape? People talk about resin and rosin, but it's still a very small segment compared to distillate. But correct me if I'm wrong. And have you entered, hemp-based vapes, Wesley? So I know there's a lot there.
Yeah,
but
we haven't touched it.
what you're doing.
We're a cannabis company. We haven't touched anything with hemp when it comes to inhalables. And honestly, cannabis is the perfect plant for that. The fact that people are putting out hemp products for those kind of things to replace, to me, just makes absolutely no sense. I'm talking about inhalables, so Theo, please don't kick me under the desk with your beverages. A few things. Chris a little while ago had said, selling beyond price and potency, and I think that he and I both should talk a little bit about that because that is absolutely critical. First off, when it comes to price, you can have a $60, we'll call it premium vape, or a $30 non-premium vape, and somebody might go, "Oh my God, one's so expensive and one's not." You're probably getting somewhere around 250 or 300 inhalations out of a 1 gram vape pen. And for a lot of people, one inhalation is all they need. But if you do the math, that comes down to, for the premium vape, 2 cents, and the non-premium vape, 1 cent. And so do you think for a consumer coming in, and this is one of the unfortunate things we've done as our industry, we've treated cannabis products, which are not commodities, and we treat them like commodities. We sell them like commodities. This is half the price. And a lot of people be like, I'm not an idiot. Why should I pay double for this? And instead going, hey, here's a premium product. It's got this, or you've got this, but you're only saving 1 penny, sort of per inhalation. And most people go, I value my experience as much more than that, sort of penny. And I think we'll get there. I mean, I know it was a little bit of a downer earlier when you said what kind of things will turn around the next year or two. That was at this macro regulatory environment. One of the more sort of promising trends over the last few years have been what are called all-in-ones. These are, you get everything, you don't have to attach a battery, they're already charged and they go. There's a new bill that has just been introduced this month to ban all-in-ones because we have one product that's doing really well. What does our state legislature do? Maybe we should take it away. So that's why I'm not being sort of optimistic. What I am incredibly optimistic, though, is I do think we are seeing the beginnings of the end where people sell on price and potency. It doesn't do anybody any good. You said just a few seconds ago, costs have been going down. No, prices are going down. Costs have gone up. The inflationary factors that we deal with on everything from people to rent to gas to insurance. We're in California, for God's sake. Insurance is one of the biggest line items. All of these things have gone up. They've gone up every year since legalization. We're in year 7, they've gone up and prices have only gone down. So unless you're really bad at math, that means the margins have gone down, and they very much have. Now, I think Keith had mentioned their prices have gone up. The heavy hitters has held prices, and it hasn't been easy, and we've given market share, but the way for us, our path of building a brand was to be able to have margin to invest into the quality, to invest into the consumer sort of experience, and not sell on the basis of price.
Right. Thank you, Chris.
One thing that should be emphasized, Chris runs one of the largest sort of groups of retailers, or one of the largest retailers in California. So he's got this interesting, sort of thing where all the things I talk about, how difficult it is to compete for shelf space and so forth. He knows after a heavy hitter salesperson or a Mammoth salesperson goes calling, 30 seconds later, somebody's in going, whatever that guy said, we'll pay more, we'll do this, whatever it takes. Right. And so you have to have a product that people need on their shelves, or you will get bought out of there in a nanosecond.
So thank you. So Chris, same question, stay to the category in the case of vapes. Gremlin has focused only on all-in-ones. Are cards continuing to decline, or are you going to enter all-in-ones? The focus on live rosinos more recently, just in general. I'm surprised that obviously Gremlin has done great, but in such a short period of time, it has some of the top SKUs in the category, right? I don't know what that says about the category in terms of low barriers to entry, but go on, based on headset, I guess.
Yeah. And to Wes's point, I sit on both sides of this equation. On the retail side, we have 16 stores operating across the state. Some of the higher volumes, Airfield Supply Company and Caliva and others, that have been around for. Airfield just celebrated its 15th anniversary. So, we've seen the evolutions of the industry on that side to where we are today. And then on the brand side, again, that's kind of another reason that we focus so much on making Gremlin and launching this thing is, we needed a brand that represented the consumer of today and the market of today. And, I think, Wes, you kind of said it too, which I think is interesting, is I always talk about, and there's probably someone who's coined this more eloquently, but, the age of experience versus the age of accessibility, right? And so many of the markets across the country and really California up until recently was still living in the age of accessibility, right? Where, I can't remember who said it, but it's like you're literally just happy you can walk into a dispensary and purchase products. That means that you're not living in an age of experience. Experience is the thing you add on top, right? This isn't Maslow's hierarchy of needs. We're just talking shelter here. Like, we haven't gotten to higher order thinking. California is edging its way towards experience. And I think the thing that will get us there is brands that are not operating simply on the accessibility concepts of price and THC and all these kind of things. Experience is, what's the form factor? What's the content that's inside it? How is it made? All of those things that up level you to the next thing. I think Keith was talking about, we're working with doctors and pushing it on that side of things. Like it's all of us taking this conscious step up to get there. So, I think when it was on the vape segment specifically, we really saw the identification of where the consumer trend was going, and in several other categories. I mean, you see all-in-one as a big progression, right? It's convenient, it's easy to use. You can make it fashionable if you'd like. You can brand it in a way that has personality to it. It checks a lot of those boxes. And then what is the experience you get from the product side of it? So yeah, we first launched with all-in-ones, across a very, sort of terp focus, very flavor driven, what the consumer was kind of looking for there, but always had eyes on, that pushing the experience up. So towards rosin and towards better things there. We recently also introduced a dual chamber live rosin vape. I think first one on the market, at least in California, where you're getting indoor live rosin, 2 different half grams in a single unit. So you can really experience, buzzword, switching it from one strain to the other and mixing them together. So those kind of things, it's about continuing to kind of look for those innovation opportunities that is familiar to the consumer, but also leads them a little bit ahead. So yeah, you mentioned, the rosin category, it's not huge, but rosin's competition isn't, we don't view it as the other rosin makers. We view it as everyone who's out there producing any inhalable products. Because ultimately, if you can create something efficiently and get it to a point that it's a viable audience, even for someone who is purchasing distillate or live resin, rosin can be a better experience. It could be cleaner. It could be more full flavor and more cannabis driven. So, we think those are the big opportunities when it comes to vape. And there are just different consumers out there. You're not going to be able to speak to everyone with one product. There is no silver bullet in the majority of categories that cannabis is relevant for. But that's kind of also one of the beauties, is there are so many different ways to onboard cannabis that you don't have to have a silver bullet. You can create really meaningful moments and ultimately put together a large portfolio that can speak to a lot of those different things without sort of losing focus on the through point, whatever that is. So with Gremlin, it's flower-driven products with incredible quality at reasonable prices, and matching those 3 things together to really offer a differentiated experience that moves beyond simply just competing at price or any of those kind of things.
Well, that's great. Thank you. And congrats again on the progress that Gremlin is making. Moving on to edibles, Keith. I guess the first question, there's a lot to cover there for me, but in the case of edibles, it seems to be a more concentrated category than others, right? Flower tends to be very fragmented. In edibles, in most markets, it's yourselves, Kanha, Wild, Camino, Wana. Stacey, I guess, is trying to break into edibles in California. But just, I guess, from your point of view, why are edibles typically more concentrated from a market share perspective than say, flower or pre-rolls or other categories?
I think they more closely resemble traditional CPG, where you have a consistent experience every time. If you're talking about flower is a natural product. It's going to be extremely different. The same strain can impact you differently. So it's the CPG factor. We were one of the first companies to invest heavily in automation, which allowed us to make kind of a perfect gummy every time. So we won an award for being the best formulated gummy. When I talk to bud tenders or consumers and we talk about the brand Kanha, what comes back is I get that same experience every time. I come back because of the reliability. Probably the same reason why Theo maybe isn't as big an edibles consumer. 4 or 5 years ago, you would go, to San Francisco, to Dolores Park, buy a pot brownie. You don't know whether you're getting the end of the pan that had 0 or the part of the pan that had 1,000 milligrams, and you're going to make it home next week. I call that stoner roulette. So we've taken stoner roulette out of the equation, made it a very consistent process. It's interesting what you say, Pablo, about stickiness, right, of different product categories. I looked at headset data from April of last year, and the top 3 flower brands totaled 15% market share. The top 3 pre-rolls were 34% market share. The top 3 vapes were 49% market share, and the top 3 edibles were 65% market share. So you're right. I think, the CPG factor for edibles has kind of led the troops. Sounds from Theo that beverages are kind of in a similar category. I think edibles and beverages are your typical CPG category. Growing, flower or weed has not been a typical CPG category. So I think that's part of the answer to your question.
Oh, thank you. And Keith, staying with you. So what's new in terms of innovation? It seems to me that it's still the holy grail for edibles is still onset, right? I know people talk about nano emulsion, but it still takes, 45 minutes to 1 hour. But correct me if I'm wrong. I mean, is that still the holy grail, or is there progress on that front?
I think there's a couple holy grails, but we actually pioneered the very first nano THC product in the world, I believe, that was actually that you could purchase in a commercial dispensary. We are still well known for our Kanha nano product. So we use a third-party rapid absorption technology that's actually been had phase 3 trials at Harvard University. So a lot of fast acting has tended to be kind of not much science behind it. We actually use a third-party partner that does have science behind it. Our edibles kick in about 20 minutes. You begin to feel it. It peaks more like an hour. I almost view our nano edibles as something between a vape, which hits you pretty quickly, and then kind of, after a while dies away. A classic edible hits you very slowly, and 4 hours later, you could still be, not able to drive your car. The nano gummy is somewhere in between, which I think is, a really powerful demographic of people that want to basically take an edible. I mentioned also earlier, we hooked up with a couple of doctors. One is an OBGYN, the other is a PhD in chemistry to create a function line. So a lot of people don't want to go in. They don't care about how much THC, whether it's THCV or CBD. They want something for sleep. Sleep is the #1 selling gummy across all the major brands. We have an energy gummy that uses THCV. So it's kind of your daytime gummy to give you energy. We have a love gummy that's gotten amazing feedback at cannabis conferences. I keep having some of these older people come up to me and thank me about how they've rekindled things with their partner. I love to hear stories like that. So there's really, we know that everything is moving towards more of a natural solution. Taking sleeping pills, it has long-term health effects without a doubt, hooks you on it. Having a natural plant medicine to give you energy, to allow you to sleep, to have you, connect with another person on a deep level, that's what people are looking for. So I think function is a huge category that's just beginning now and will be, much bigger when you begin selling product in, Walgreens or something.
Only issue with function is that you still have a lot of restrictions in terms of how you can label or the claims you can make, right? Or you can get around that.
No, you cannot make FDA label claims. So it may do this and it may do that. The reality is that it does do that for most people. We know that cannabis is a plant. Everybody's body system reacts differently. But in general, our function products do what they say they do.
Well, that's great. And Keith, last one on edibles. Just talk about what you're doing in terms of hemp-infused edibles.
Yeah, so we actually launched our hemp lineup, which included the function lineup and nanos online at kanhalife.com. So we're now selling to 35 states that we couldn't enter into before. Now our footprint nationally is significant. I think Theo has a similar experience. The challenge with California licensed cannabis brands, it costs a lot of money to set up operations in Illinois or New York or Massachusetts. Or you have a partner that manufactures for you and you don't control the quality. So you don't know how that's going to impact your brand over time. Hemp has been the best brand building opportunity. We have ads on Instagram, TikTok. So you can actually learn about Kanha being in Georgia, Texas, etc. So, if we're talking about brands, brand building is really what we do as a business. And hemp has allowed us to build brand in a way that licensed cannabis is not. And then we're taking it one step further internationally. So we are the first brand, as I mentioned, in Asia, having operations. We've been producing their manufacturing for almost a year. We started last March. We're in a ton of stores. Our sales are growing in Thailand. But longer term, there will be a global market for cannabis. We know that the entire cannabis license industry, which got inflated in valuations, was based on this kind of myth or reality of export, because Canada is about the same size as California. You couldn't have those kind of valuations being subject only to the Canadian market. Well, it's actually happening. Aurora, Organigram are now 20% of their sales, and their highest margins are selling into the European, particularly the German flower market. Australia has been an importer. I do think when you look out decades, you're going to have basically, this will be no different than every other product. It'll be a global export. It's going to be produced in low-cost countries and sold to high-cost countries. Thailand is a great place to have a low-cost base operation. We actually just signed a deal with a distributor in Japan to sell CBD-only products into the Japanese market, CBD gummies, capsules, and tinctures.
Under the Kanha brand. Under the Kanha brand.
Under the Kanha brand. So, I mean, when you think out many decades, I would love to be the #1 brand in Asia, which has by far the largest population on the planet.
Thank you. Those are great insights. Look, I'm going to move the discussion now to funding. Whatever you can disclose, if some of you are doing a funding round or raising capital, maybe you might want to pitch it here. Again, based on what you disclose, I'll start with you, Keith. How are you funding your business? Is cash burn an issue? How will you describe the market conditions for private operators like yourself in terms of raising equity or debt? Keith, just a brief answer.
Yeah, I'll answer your last question first. Shitty. It's a difficult market to raise debt. Cannabis debt is in high teens, which is challenging to run a company, deliver products and make money at those terms, but it sometimes is a useful tool. We've raised equity in the past, not a lot. We've been incredible stewards of capital. We are today out there looking to raise additional preferred equity. So I think it's kind of an ongoing basis for most brands that if you want to expand, you do need equity capital to make investments in new markets.
Right. Thank you. Theo, same question.
Yeah, so the first couple of years of the business was funded just by myself, business partners, friends, and family. About 2 years ago, we raised our first more strategic round of funding that was led by 2 of the co-founders or founding partners of Boston Beer, of Sam Adams. That was strategic, one from a financial standpoint, but also from a strategic standpoint. And at that same time is when we started expanding more on the recreational side into hemp as well. More recently, we've raised some capital from some cannabis venture capital firms like Mindset, Delta Emerald, and one large multi-state operator that I can't really disclose, but yeah, we're well funded. We've raised about $12 million to date. We're in a good cash flow spot. We're not currently fundraising. If the right strategic partner came at us, either from within cannabis or more likely on the hemp side, outside of cannabis, whether that's a strategic distributor, brand house, or someone of that nature, maybe it would make sense, but we're not currently fundraising at the moment.
Got it. Wesley, the same question for you.
Yeah, so our roots go back well before legalization, and so there really was no investment capital at that point. You might know a guy who knows a guy who wants to put money in, but basically the concept was operate profitably or don't operate at all. And so that that got built into our operations, built into our culture, built into our ethos. And so the company has essentially always been funded by internal cash flow. We did recently do a round with Mindset Capital, a similar investor, and honestly, we just fell in love with this guy and saw it as a great opportunity to have money available for future acquisitions, because we really do believe that there's going to be a lot of what I'll call healthy M&A, over the coming years.
Thank you, Chris. I realize that Gold Flora is a public company, so there's only so much you can say, but any thoughts in terms of expansion plans, M&A, how you fund that?
Yeah, I mean, we're always, as you said, we're public, so the marketing guy never gets to talk. But we're always interested in looking at just strategic expansion. I think, like you said, we're really focused on California. This is obviously where we've set up all of our vertical operations, and we really want to prove out the model in California and have Gremlin become even more of a leader than it is, and look at what the appropriate next steps are from that. But we believe when you win California, you can win anywhere, and with our model, we believe we have the right approach to do that at the the execution level. And ultimately, like you said, I mean, in 11, not even 11 months, 9 months, we've gone from not existing in the vape category to now we're number 2 in all-in-ones. We're number 2 in rosin. So we're proving out the performance, and we're going to use that to springboard and continue to go from there.
Well, thank you. Look, I'm going to take some questions that I received by email, but brief answers. Theo, I mean, someone is asking, I guess it's a two-part question. A lot of brands make claims about their sales. What do you think are the top 5 hemp Delta 9 drinks brands out there? And the second question is, how big do you think is the category right now in terms of hemp Delta 9 drinks? There's a lot of claims being made out there. Any thoughts on that? Quick answer, short answer.
Yeah, I would say market size, and this is something I've tried to evaluate both on a state level and on a national level. There's no real viable data out there. There's no Nielsen, there's no ComScore. All the cannabis data providers like Headset and Pistol, BDSA don't have data on hemp. My best guess is on the retail side, and hemp is somewhere between 300 to 500 million. Is what's projected really for this year. Maybe it can reach 500 million in terms of the top 5 brands. And you mentioned it, Pablo. I'd say most of them are making the majority of their money from D2C. I'd say the top brand right now on D2C is Breeze, far and away. They seem to have a run rate somewhere between maybe 30 to 50 million dollars. So it is very substantial. I think on the wholesale side, if you set aside D2C, and I touched on it a little bit, but there aren't that many brands that have been successful in multiple states. I'd say the top 2-3 brands on the retail side are probably doing in the 10 to 25 million dollar range. Wholesale, I don't think that there's a brand doing more than that at the moment.
Thank you. Keith, on the edible side, I'm going to paraphrase the question, but there are these umbrella brands like Steezy, West Coast Cure that are being extended into many categories, including edibles. I mean, how are they, based on the numbers you mentioned, it seems they are not making an impact in edibles.
Not nearly as they are in other categories. Stizzy's had even a fast-acting gummy, but they do well in their stores for sure. They push their local products. I think a lot of, Stizzy's a tough competitor in the retail space, and a lot of other retailers probably are not so keen to continue to push all the Stizzy brands. So I mean, it's a big market category. There's room for all of us, and I think the people that have multiple lines will have some element of success in edibles.
Thank you. And Wesley, regarding the New York market, Heavy Hitters is available there. I mean, a lot of, we've seen the headlines, $1 billion market seems to be very concentrated on a few stores, although there are more and more stores opening. Just your quick thoughts in terms of how your brand is doing there and how the market is.
You're talking about New York?
Yeah, New York market.
New York is going great, and there's a lot of excitement. I think we need to sort of look back and go, 2 years ago, there was at this time like 10 stores, maybe not even that. And then, for the longest time, it was under 50. And over the last many, many months, 5 new stores have been opening a week. And so, of course, there's a lot of excitement, and, everybody's going to probably be showing growth. The real important thing is, what are the same store sales? Are people coming back? Are building loyalty? And we've been very, very, very happy with that market. But for us, it was a little bit like as Theo was, sort of talking about, and Keith, it wasn't a licensing deal. It wasn't anything along those lines. We put a stake in the ground. One thing about California is it seems like everybody in this state was either born, or their spouse was born or raised, or they grew up in either New York or New Jersey. So we found it really easy. Talk about people leaving the state. It's sort of like, hey, who wants to go help us open up in New York? All these hands go up. And these are people who have been with us for years. They knew the brand. They know how California cannabis, and they know how to work in a ruthlessly efficient and competitive market. So I think that has given us a real sort of advantage there. And honestly, things are just going great, but we know that the time will come where every market goes through this period, and then every market becomes mature at some point or another. And New York will be no exception.
No, thank you. Thank you very much. Look, I mean, thanks to our panelists here. closing remarks from each one of you. I guess, you use your time as you see fit here, but for the audience, intentionally, we didn't talk about rescheduling or what may happen in DC. There's a real industry out there, right? 500,000 jobs, $9 billion in income taxes and sales taxes. We all know the $33 billion in legal sales. So there's a real industry, and that's what we're trying to do with these panels here. But Keith, any closing remarks and any message you want to send to investors looking at private and public companies out there? Thank you.
Yeah, I think you need to diversify, right? I think the different product categories each have their space. I do think hemp is here to stay. I think Pandora's box has been opened. I think the alcohol bev companies are too powerful at lobbying to probably shut that entirely. But, I'm hoping that we have a future where hemp and licensed cannabis is on the same playing field, and that we basically have regulations that we could both, operate under. And we really look forward to international expansion. I think it's going to be fun years ahead.
Thank you. Theo, same closing remarks.
Yeah, I think like Keith said, and I think we're all in the same boat here. We don't know when rescheduling is going to happen. We don't know when federal legalization is going to happen. I do think, to your point, the Farm Bill is here to stay. I think on the hemp side, we are super optimistic. We do think that both I don't even like to say the regulated and the non-regulated side, but I do think that hemp and the regulated side can live side by side and will live side by side. We see it as, in the recreational, in dispensaries, it will be flower, vapes, edibles. On the more mainstream wine and liquor bars and restaurants, it will be probably confined to just beverage or maybe edibles as well, as Keith is doing on the Kanha side. We're super optimistic about the outlook, specifically on beverage, but I think cannabis isn't going anywhere. It's just a matter of time before things really start to explode. So we all need to all of us here just need to stay focused, continue to build brands. And I think we're going to see, there is light at the end of the tunnel. So just need to stay focused.
Thank you. Chris, closing remarks.
Yeah, I think just, summing up the theme of the panel a little bit, I think it's, first of all, it's great to be able to have a conversation with other brands across California that are, I think, bullish on the state as we are, and I am. I really do think California dictates a lot of the way the world thinks, or influences the way the world thinks. And I think the brands that are creating meaningful, sticky, differentiated brands that, as a brand person, that understand why they exist and how they bring, uniqueness to the world, are going to be ones that'll be around for a long time. And I think we're at a really interesting time watching how people navigate, a rapidly changing, complex market. And I think what we see in the way people act now will dictate a lot of what we'll see across other markets and across the world. And I think, for us on the Gremlin side of things, we're thrilled to be able to enter the market fast, expand rapidly, and continue to offer a growing portfolio of products that speak to today's California consumer, because that is tomorrow's consumer across the country. So I think it's a really exciting time, as we all said, and I think it's now about really trying to figure out the right path forward and open up some of those doors in creative ways. That's 2025.
Thank you, Chris. Wesley, closing remarks.
Yeah, well, look, alcohol has had a pretty amazing run for 5,000 years or whatever it's been, and pharmaceutical drugs for a good 100-year run or whatever it happened to be. But people are now realizing that cannabis can be a much safer alternative in many of the sort of use cases for those. So I'm very, very sort of bullish at the macro level, and we just have to get there.
That's great. Thank you very much to our panelists, and thank you to everyone that joined via Zoom and via X. And of course, as in the past, the video will live on in YouTube, Spotify, and other platforms. Everyone have a good day. Thank you.
Thank you very much, Pablo.
Everyone.